at one point you are seeing 50% or you are seeing 100% in profit, and the next thing you are seeing minus 100, minus 200, and you want to get liquidated. Your account is almost blown out. This is because you don't know how to remain in profits. While trading, there is something called remain in profits, and to remain in profits, you need to do just very one simple task, and that is what I'm going to share with you in this video. Oloja Nathaniel is my name, and here I teach you how to make money, especially through cryptocurrencies, and you would want to subscribe to my channel and be part of this family. Okay, for you to remain in profits means you would have to take your trades in such a way that would lead to you making profits, and that has to do with buying early or getting the right entry, knowing your support and resistance level. I have made videos about all these things, and I'm going to leave the link in the description box so you can go check it out and learn for yourself. Now that you know how to trade cryptocurrency, you know how to do your buys, and you know how to do your sell. You also know your support level. You know your supports, you know your resistance, and you know your indicators. All right, these are the basic things, and I have talked about them all. I have a series about technical indicators, so you'll also want to check it out. Now, to remain in profits, let's say you buy a particular cryptocurrency here, which is let's say $0.1. This is the asset. Okay, you bought this coin, and the price goes up to 0.2. Remember, this is where you entered, and this is your entry. You bought at 0.1, it goes to 0.2, and at this point you are already in 100% profit right now, and it is possible we might see something like this in price, and here this price becomes 0.08. okay, you entered at this point, and we are coming here from what we tested, the 0.2. Now you were in profit here, you were in 100% profit at this point, and right now you are losing your money. This is 0 point, and it is possible we would even get to test this this point, which is a resistance level, and fall back down. Now you are losing more money. This might possibly be 0.05. okay, you're already losing 50% of your assets. If you are doing futures trading, the percentage you are going to be making or losing at every point is determined by your leverage and your margin. Okay, but I'm just using the 50 and 100% as an example for this class. Now, you had the chance to go out of this market, and because you did not, you are paying with your money. This is what I want you to avoid. Okay, you don't have to go into profit and lose your money at the end of the day. Now, there is a way to always remain in profit. Once you are in profit, you must win that trade. You must win that trade. Okay, now when you bought this, you already set your stop loss, or okay, yeah, I am supposed to indicate stop loss, loss, and take profits. Yes, you should also know this guy. You already know your support level, you know your indicators, you know how to do the stop loss and take profits, and here you said take profit for me, let's say at 0.3. So we did not go to 0.3 in this trade, but you already did your stop loss because you bought here, and you see stop loss for me at this point here. This is your stop loss, and this is your take profits, TP. Okay, follow me carefully. This is your take profit and this is your stop loss. Now we went as high as this. Sorry, we went as high as this and fell very low, which means it might have hit your stop loss and you're in loss. Now you can avoid this actually. Why? Because when you set your take profits at 0.3 and you bought at 0.1, ideally your take profit should actually be not be out of grid, and your stop loss should be based on the percentage you are supposed to or you want to lose. You might want to lose just 1% of your portfolio or your margin. You might want to just say, okay, I am offering to lose 2% of everything I have. So when it goes to minus 2% of my margin, please go out of the trade, which is very all right. Now, because we have already seen, this level, you started this trade and boom, it was going up, and it came down, it went up. You were just being excited because, okay, you just had this at the back of your mind that would go to 0.3. Now, that might be correct because from here, the market can, go this way, which means we came back to, test this point, okay? Coming back to test this point does not mean the end of the market, but you are already out of the market and you might even be liquidated at the end of the day before we get to 0.5. Meanwhile, you had the chance to take profit. And the most annoying part is that we are here at the 0.3, which you predicted at last. So this is really annoying and it is painful for traders. What you want to do is when you see a positive price movement to a reasonable percent, say 5, 10, 20, 30, even $50, you are going to adjust your stop loss. This will become stop loss 1, and you are going to make another stop loss from this point. Say we are here. If the price moves as high as 50% here, you're going to set your stop loss so somewhere close. Stop loss, this becomes another stop loss for you, because when we go here and it is coming to break out of this, which is breaking down, it is better you go out of this trade. Right now, you are not losing, you're taking something out of the trade. But when you let it fall, okay, it is all might kick you out of the market. Now, one of the reasons I'm showing you this is to help those of us that are, using small accounts, okay? And if you trade with small accounts, you would continue to blow your money again and again and again. If you don't apply some of these principles, you would understand that at some point you are making a lot of money, then before you know it, everything is gone. Yeah, it happened to me as well. You can, consistently make money for 1 week, even a month, and in 1 hour, everything is gone. Why? Because we neglect things like this. And that is why I'm here to, show us this strategy. Always adjust your stop loss. And when you do that, take away your profits. You can even move it to your spot wallet. As long as you are, when you keep making money, make sure you are withdrawing them. Don't, keep them there and say, I want to grow this account till it becomes $1 million. Now, that is not a wise decision, because at some point, greed might come in. You might want to use a higher leverage and it will easily blow your account, all right? So always remember to adjust your stop loss at this point and push it up. So when we come down here, you can still be in 10% profit or 15% or 5%, okay? Now, same thing happens to your take profit. If you see that, okay, if you see that when we got to this point, it became weak, like the price movement or volume is reducing and all that, you might want to reduce this guy also to here, okay? You might say, okay, this is going to be my TP2, So this is the 1 and this is the 2. So this is stop loss 1 and this is the 2. When 1 is not being feasible, or you don't see it coming to reality soon because of the change in price or change in market trend, it is always all right to bend your stop loss and take profit, because when you do that, it is going to save you the stress or save you the chance of being liquidated. Don't forget to always monitor your charts when you are in a trade and you know you don't have the capacity or the funds to leave this trade for days. Please always monitor your trade, because trends can change at any point. When trends change, you should adjust alongside. Just like we have here, there was a change in trend, and if you are not online to monitor your charts, it is going to blow your account. And sometimes stop loss or take profit do not work exactly the way we play them, because if you say at this point, this is my stop loss and here is my take profit, okay, when there is volatility in the market and we go this way, okay, because of the push, this sell that just happened. Volatility means speed and rapidness that happens because of the volume of buys and sells that happens in the market. Now, when there is great volume of dumping, or the great volume for the sellers, it might push the price in nanosecond, and when that price falls, it might affect your stop loss here, because that is when that candlestick, or that's the point the candlestick was pushed down to. So you can also have that for your take profit. So you see what I just drew. This peak is where you are going to take profit, because you actually said take profit at this point, okay, but because of the force or the volatility for that candlestick, it might just push your take profits up a bit, giving you higher funds, and can also make you lose more than what you put. So if you want to set your stop loss, you might also want to check out for a higher, well, why this is not 100%, it would help you, okay, especially if you have a small account. Like I said, make sure you always set your stop loss. It is very, very important, because if you don't set your stop loss, at the moment there is a change in price, there is no how do I know, because you are paying with your money, you're paying with your hard-earned money. So that is that, guys. If this video was helpful, which I believe it is, don't forget to give it a thumbs up and subscribe to this channel and be part of this family. Okay, thank you guys, and thank you for watching.